All right. What's up, traders? Amateur Forex here with another video for you. I'm a new trader with a simple strategy that I will be implementing in demo for the next month. My system comprises of a bias that I start with, short or long. This is derived from proprietary software called the Market Maker Method dashboard, and it's a monthly subscription that I use just to get myself set up the previous day and know what direction I'm trying to go, and also what pairs I'm going to be looking at. So that's where it all starts for me. After that, I'm looking at drawing fibs, and I only trade during a certain period of time. And I should say I only execute trades during a certain period of time, and then I'll manage them after that. I have one indicator, which I will show you. But other than that, we can get right into it. Yesterday, we talked about Euro Swiss, New Zealand USD, and USD Swiss. The bias is still the same. The dashboard was updated, but it's still valid. So we're still looking for sells, longs, I should say shorts. So shorts, longs, shorts, and these two are new. These are new pairs. Gold was also there, but I'm a bit lazy. I didn't want to change I'm using FXCM. I didn't want to change my broker in this list to accommodate that. So we're going to take a look first at Euro Swiss, and wow, look at that. Unfortunately, I think I'll have to take a look at it, but it might have, depending on how far this is. And I did glance at this earlier. Oh, by the way, I'm in flight school, and I had a flight this morning, so I couldn't catch anything. It was around the same time, started at 5:30, so I couldn't catch any of this. But I would have been looking at this, maybe. I gotta look at the range here. I want a tiny range, right? So the range here, don't think that would have been what I would have wanted for. Yeah, it's about what I would have wanted for a stop. So yeah, let's see. Unfortunately, it really looks like I would have been stopped out 0.1 from my usual stop. So would I have been stopped out? Probably. With spread, maybe not, but it's probable that I would have been stopped out. That said, I still have an entry here, according to my my bar down here. This is the trend follower bar that I use. So according to the trend follower, I would have just entered here instead, and then caught it on the way down. So I for sure would have made back anything I lost there. Just out of curiosity, I want to see this. It probably, if I drew these body to body, probably not an entry point here, but this is not how I would enter, because I'm only looking for the range has to appear here, right? It has to appear here for me to take action. At this point, this is not where I would be looking for it. Okay. This is way late in the session. I'm looking for the range right here in the beginning. It may come into here from out here, but this is around where I'm looking for it. So here is actually perfectly where I would want the range, and you know, 10 pip, 15 pip stops, not bad. I prefer to use this. So for example, if this range appeared and it created a little tiny high here and went down and into here, this would be a valid stop, right? So that's what I would be looking at, and the range should be about the same, like what I was talking about earlier. Yeah, like 9.5 or something like that. You know what I mean? Like, so that's about where I would want to be, but I had drawn it from here, so we would count that as the valid fib that's drawn. Either way, I would have entered this for a sell after, let's see, so I would have been stopped out here. So my next, perfect. So I would have been stopped out here, right here. So I've been waiting. I'm not buying, right? Not buying anything. Would have been waiting for this. Okay. And then just followed this. Exit there. Looks like break even. I do follow it strictly. And then here it is, boom, all the way down to here. It doesn't look like much, it looks like 15 pips. Yeah. Actually netted a good 20, so there's TP1. All right. And yeah, that's perfect. It's not too bad. And I could take, you know, I take this as well, but this is outside of my area. So we would call it minus like 10 pips for this day on Euro Swiss. Okay, net. Moving on. Oh, that is interesting. Wait, let me look at something, because I talked about this yesterday. Just take a look here at, take a look at this. It's not very good. It's terrible. It's not ideal. Let's see, right here. Okay, all right. So, okay. So typically, we're looking at this. So after this, I would have been looking at this and been like, okay, I'm in the right because I'm selling. I talked about this yesterday, and I can go into more depth. I feel like I've already spent a lot of time on Euro Swiss right now, so I'm just gonna zoom past this. But this, if you look down at the bar here, this is about where I would want to be selling. Okay, usually. I do not like this, and if I could possibly just take it instead of taking it from there and take it from here, it's a healthier, you know, healthier range. It's not this tiny little movement. Even if I use this instead, you know what I mean? I don't want to use the tiny movement like that. And I am curious to see what it looks like. What it looks like on here. Okay. So this would be the range down. So it might be prudent for me to come up. There we go. And there's the trade right there, actually. So that's actually, that is more prudent, because that little range doesn't make any sense to be drawing that. And I wish I was doing this live. You know what I mean? Wish I was doing this live so I could seriously take this into account and really show, like, and make better decisions, you know, in retrospect. I mean, not in, instead of making it in retrospect, right? But no, that, from that perspective, that was the trade to be in at the time. So that's, I would say that executed perfectly. Stop is up here, and there that goes. I'm actually going to save this. Again, I've told you I'm new. I'm trying to adapt to certain changes and really refine the strategy, because I know it's gold, as you can see, honestly. So I've been up here selling all the way to here. So you would have gotten out. So it triggered here. you would have gotten out, and actually this is the middle there, that's 70, I think it's 70.5. That's the ideal entry, but sometimes it doesn't reach that far. So you would have gotten out here. So there's 10. Okay, you re-enter, lose this much, whatever this little tiny, this is 13. So you're looking at 0.7 pips. And I have an ECN account, so spread isn't really an issue. That's the only reason I'm not too worried about spread. Don't have to worry about like 2 pips or whatever. All right, so there's that. And then down from there, take this from here all the way down to right there. Your final is 28 minus the, what did I say, 0.7? Okay. Oh, boohoo, 27. All right. So that is what that right there, that range, because that's the high right there, down to here, just the low. That's what I should have been looking at. Okay. Next ones will go quicker, I promise. So we are buying. All right. Here's that range I was talking about. I'm not going to go into 15. It's very clear that that's the range. Okay. Boom, here it is. Beautiful. Stop is all the way down here. So entry here, all the way to, so you would, very close to 20. Very close to 20. I haven't come that close to 20. I would have taken it. And I think I actually discussed yesterday that I'm considering a 15 first TP, and then finally exiting here at 10. So again, like I said, I'm just refining. It's the same strategy. It's just still trying to figure out what exactly I want to do, especially because I'm doing this, doing this in such a short period of time, in and out, right? So, but yeah, that would have been it. Boom in here, and then again, if I had taken the second entry here, or even the major entry right here, there it is. I mean, that's the 20 right there that I was looking for. Okay, so that's it. That's the strategy. I know I'm showing this in retrospect, but I'll have some more examples tomorrow. All right, we are selling here, right? So I would have been looking at this. This might have been a loss, but let's look at this. So didn't look very good. Oh, okay, so this is a huge range here from the sell, and I'm gonna go out on the 15 so I can get a better view. Okay, so here on the 15, yeah, this would have been a loss. Are we right there? Down to here. All right, would have entered here. See how far it went down before it shifted. Sorry about that. Because it didn't really shift very. Oh, it almost went to 20. 19.4. Okay, so all the more reason to have a 15 pip first TP, and then switch it up when it's, so that would have been like almost break even, like 2 pips. We'll even say 3. Okay, for a loss. Okay, doesn't get better than that. I mean, come on. All right, and then you're out, and you're out for the rest of the day. So that is what it is. And at this point, if I've gotten profit, I'm not gonna freaking hold it past my break even. Obviously, I'm gonna move the stop to break even. We're just a little bit above for any slippage. Okay. Again, not even a loss. And even if you did lose, what's 3 pips? Most people's stop loss is like 20 pips or more. Okay, maybe 15. This is good stuff. So that was the sell. CAD. This is all scalping stuff, you know, nothing crazy. CAD, JPY. So we're looking to buy. Oh, that looks good. Yeah, I will switch to this. Buy. So here it is right here. Oh, thank goodness. I thought I wasn't recording for a second. It's like magic. Even if I entered here a little early, I should be a little more strict. See, these are little things that I have to refine. You know, do I enter early when it comes into the range? You know, do I just take it here instead? Beautiful. I mean, it doesn't get any better than this. So here's the buy. What else are we looking at? So we'll look at the range here, what you would have gotten. I'm just doing the 62% retracement, not even the, you know how often it hits this, even hit it right here. Anyway, perfect. Again, I mentioned this yesterday, but when we're buying in this area, we want it to be red right here. This is when people are like, oh yeah, time to sell. And then this happens to them and their stops are over here. That's what happens. Anyway, so when I see this red, I'm like, oh, I'm in a good spot. See, right here, boom, in a good spot. Perfect. Perfect time to be buying. There's blood in the streets. All right. All right, let's take a look at how much this was. 20 easy. Easy money. Okay, some more blood in the streets right here. Boom. Too easy. All right, USDJPY. We're supposed to be buying. Here's a range right here. I'm gonna actually, yeah, I was gonna zoom out, but I'm already zoomed out. Let's try it. Let's see what it looks like. Notice I'm drawing body to body. Oh, look at this sweet spot here. Remember I said it typically doesn't retrace back to this area. I'm sorry, that's not what I meant to say. It doesn't always come down to this area. That's why taking it at the 62% is ideal. Okay, and I almost don't want to measure this. So this is used, this 0.5 minus 0.5 is used as first TP if it's 15 pips or more. By the way, I didn't come up with this. I may have adapted it for myself, but look at this. I can't lie to you. Look how this is a perfect place to be buying because it's red. That's when people are selling. Okay. Anyway, that's why you don't trust indicators. They just do the opposite. Anyway, and you're probably wondering, well, why do you use it? It's for trend following. Okay. On the low time frame. So I'll open up the 5 minute and I'll show you how I would have followed this. All right. Anyway, yeah. So this would be TP1, TP2, and then ultimately, I don't think I even have it on here, but there's another one up here. I think it's 2. So, or -2, I should say. All right. Delete that. We're going to go down to the 5 minute and see how I would have managed this after TP1. Okay. So entry here. This actually would have been an exit. Okay. I just follow this. I just do what it tells me. So exit here and then back in right here. So yes, it sucks. It sucks to not be in the whole thing because initial entry was like down here, but I'm still above. I can't cry about it. And you know, it's just helping me out, keeping me out of trouble. So there's 20 plus the whatever it was that you made before you closed it out. And that's it. So that's all of them. Again, still refining the strategy, but in its core, at its core, it's very solid. I borrowed things here and there from a couple different people that I've linked below, minus ICT, Inner Circle Trader. So I've borrowed the fib use from him there, and obviously the market maker method. And then, I mean, I found this, but I don't think I would have found this if I never found no nonsense Forex. That's his name. Yes. So really, it's just a combined like effort from all of them, and all of it is free. All the information is free. The dashboard I have to pay for, but I'm telling you, it was right for all of these. The direction, always trade alongside it. So I'm going to show you one more thing, and this will be over. But I wanted to take a look at the institutional levels, okay, and how price was reacting to them. Okay, so here we are, this 500 level right here. Price bounced right off of that and went down to here. So this could have been a target. Again, I don't really use it. I just like to have it on there and take a look. And the reason I don't use it is because I already have these fib lines, and also, as you can see, it squeezes my chart, and I have to stretch out my chart every single time. But you can definitely use them as target levels. But you can see how price reacts to these levels. Banks use them. Some people draw the fibs on them. I haven't had that much success with it. Maybe I haven't practiced it enough. Yeah, but some people do draw their fibs on them. So I just wanted to show you real quick. We don't have to go through all of them. So I'm just going to close out with that. And just always remember the plan, the process, the profit. And if we get that together, maybe one day we'll all be buying Lambos on Mars. Thanks for watching.